Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, we're going to be going over a deep dive into fundamentals of what's been going on in the digital asset space, why we've seen a risk-off market mood most recently, how that's affected digital assets across the board, and then towards the end of the video breakdown, make sure that you stick around because we're going to be going over some immediate price action and areas of interest on XRP, giving you guys my projection before we head into the FOMC meeting from the Federal Reserve and the announcement this week. So again, if you guys enjoy these video breakdowns, if you've been paying attention to the valued information that we've been giving you all, make sure that you do us a favor, smash that thumbs up button and subscribe. This will probably be a little bit of a longer video breakdown. I'll try to get through all this educational material as fast as possible. Now, the video breakdown that I just showed you all at the beginning of this YouTube video was a video that we put out 2 days ago, where we had mentioned to you all, if you go to roughly about 14 minutes and 59 seconds into this video, you guys can see screenshots on my charts right here, where we said that if we can see the dollar push bullish back towards the 104.00 psychological level, we would most likely further see sell pressure in the digital asset space. This market structure could be creating a higher low in the dollar in comparison to previous areas of interest, where we saw this bullish rally throughout 2024 so far, and we could start to correct and inch back up above the 104.00, breaking above this previous high. And a scenario like this would most likely weigh further on risk assets, creating further significant pullback opportunities across the board, not only on Bitcoin, but also on XRP and other digital assets that we hold in our portfolio. Fast forward to today, here are the drawings from that day, and you can see the dollar had a significant increase up into roughly around the 104.00 before slightly pulling back on the day. So this just goes to show, again, the information that we're attempting to put out to you all in advance. That's the key here, in advance. We hope that you all are paying attention, all right? So today, we're going to go over why the dollar was so strong today, how that affected risk assets, and then towards the end of this, I'll give you guys my updates on XRP, what I think is going to potentially play out, and what things to be paying attention to. So the reason why I'm covering this information, not only to educate individuals, but because there is no real mainstream outlet that really goes into this in detail. So here, for example, is an article talking about why is the crypto market crashing. And all this article goes on to say and talk about is how Bitcoin's pulling back. That's it. There's no fundamental reason in this whole entire article talking about why Bitcoin's pulling back. They talk a little bit about indicators, right? As if indicators are what's creating pullbacks in this market. Oh, because RSI is overbought, whatever, blah, blah, blah. That has nothing to do with why the cryptocurrency market is pulling back. It has everything to do with risk on, risk off market mood, and where these asset managers, these hedge funds, these family offices with much more momentum and liquidity than you and I are reallocating their capital, right? If there's a risk off market mood, they tend to put their money into safer haven assets like gold or like the United States dollar. And that's exactly what we're seeing. So here's a post again, just to show you guys that we've been trying to cover this information on a daily and weekly basis for you all, so you can really tap in and pay attention to the day-to-day price swings in the digital asset space, really educating you all and giving you a firm understanding of why this is happening, so you can seriously progress in your trading and investing career. We mentioned crypto liquidations continuing into the weekend and gave you a full breakdown as to why, right? CYPRX weekend breakdown, giving you full metrics as to why the altcoin and digital asset space as a whole was pulling back, right? Now, let's continue up into this week. So what are we seeing today? Dollar gaining support from moderated Fed rate cut pricing. Here we can see the US dollar has risen recently and should continue to gain in the medium term due to markets significantly scaling back expectations of Federal Reserve rate cuts. 2 cuts by the end of the year from 7 cuts anticipated earlier this year. So remember that back at the end of 2023, like October, November, December, the narrative that the Federal Reserve was going to cut interest rates in 2024 really started fueling and pumping up risk assets across the board. We saw stocks go parabolic. We saw Bitcoin really start to gain momentum towards the end of the year last year. And then same with some altcoins across the board gaining momentum. We can see articles that came out last year. This is from November 2023. Fed rate cut hopes are fueling an everything rally in Wall Street. So the market was extremely ahead of itself. It was starting to price in the expectation and the hopes that at some point in time in 2024, the Federal Reserve was going to start to cut rates. Well, due to the recent data, that's not really what it seems like anymore. That scenario, that whole entire optimism surrounding rate cuts is starting to fade. As you can see, at the end of the year and the beginning of the year this year, so at the end of last year, 2023, and the beginning of this year, the market was pricing in 7 rate cuts. Now the market is only pricing in 2 rate cuts this year, which is a significant decrease in rate cut expectations, right? And why is all of this happening? It's not random. This is all, again, information that we put out to you all in advance. So what did we see in the short term last week, right? We saw some higher than expected and higher than market forecast CPI and PPI data. Not only that, but we saw some robust labor market data as well, with lower unemployment claims only coming out at 209,000, which was much lower than the previous reading at 217,000 and lower than market forecast, signaling strength and confidence in the US economy still, right? So these expectations, they're being pushed back because of market fundamentals that we've been attempting to cover in video breakdowns, that for some odd reason, everybody wants to know why the market's crashing, but nobody wants to watch these educational video breakdowns. So if you have been paying attention and you are one of the 2,800 people that watched this video 2 days ago, do us a favor, smash that thumbs up button, because you are tapped in. Because now here we are in the future, right? And we've seen the dollar strength. And we're going to go over in today's video breakdown how that is correlated to weigh on risk assets. So let's just, before we get into the technical analysis, go over a quick update. Why is the risk asset class as a whole, i.e. cryptocurrencies is our main focus, down today? Okay, before I get into showing you guys the comparison between the US dollar strength and digital assets like XRP and how that affected the markets today, let's just understand as a whole, as my community who's interested in this information, to really grasp the concepts that I'm trying to teach. So the current market sentiment, this is again information that we put out to the private CYPRX community well in advance. So if you want access to this info before we give it to YouTube, before we give it to Twitter, consider joining our monthly Discord. Okay, so here's what I wrote. The current market sentiment continued to favor risk-off dynamics today, as the US dollar maintained its robust position, largely propelled by positive economic data. Specifically, February saw notable growth trends in housing starts and building permits across the US. Housing starts surged impressively by 10.7%, reaching 1.52 million units, marking a significant rebound from January's 12.3% decline, according to a data released by the US Census Bureau. In tandem, building permits also rose by 1.9%, bouncing back from a slight reading of 0.3% in the dip in the preceding month. And you can go track all this information on FX Tree, on Forex Factory. I've shown you guys that info in previous video breakdowns, right? Now, this data instigated a bullish trajectory for the US dollar index, which steadfastly held its ground near the 104.00 mark, registering a 0.32% gain for the day. The strength of the dollar can be attributed to various factors. So let's talk about these factors. What are they? What's contributing to the recent dollar strength? And what could potentially play out the rest of this week? Let's cover that. Firstly, the upbeat housing figures signal economic resilience and potential growth, instilling confidence in the U.S. economy. Additionally, recent positive indicators such as lower unemployment claims, which typically signify a robust labor market, contribute to the dollar strength. Lower unemployment claims as well that we got last week imply a healthier economy, thereby enhancing appeal for the dollar, which again we saw last week. Moreover, last week as well, higher consumer price index, i.e. CPI, and producer price index, PPI figures from last week also played a role in bolstering the dollar. Elevated CPI and PPI, why is this significant? Because it suggests increasing inflationary pressures, which could prompt the Federal Reserve to consider keeping monetary policy tight or tightening it further, thereby supporting the dollar's strength. So you guys again see why these rate cut hopes, remember, that the market was feeding off of back at the end of 2023 and into 2024, is now fading due to the economic data indicators that are coming out on a monthly basis. Now, this accumulation of positive economic indicators further solidifies the US dollar status as a safe haven asset, consequently applying downward pressure on riskier assets with the market. Now, one thing that I know that individuals watching this YouTube channel and watching this video breakdown will say in the back of their head, oh, the dollar's going to fall, the dollar's going to drop one day, da da da. Yes, one day. Absolutely, I agree. 110% the dollar's demise is coming. But when we're not here to put that into perspective, what we're here to do is react to this information. Knowing this in advance, our community was able to take profits. Our community was able to reallocate that capital back into the market now that the market's discounted. And we showed you in previous video breakdowns how we were able to call out that top at the market by understanding these fundamental shifts and understanding risk on, risk off market move. Just to show you guys a beautiful example, here you can see the same exact time. This is how correlated the markets are with the United States dollar, right? Here you can see this blue circle is roughly at the start of the day, Monday, March 18th, right? When the dollar started to increase strength significantly, right? Tapping all the way up into that 104 major psychological level. Inversely, on the opposite side of the spectrum, on the right-hand side, we have XRP. XRP, this red circle, is the same exact time where this blue circle is on the dollar, and you can see the outflows of XRP, right? i.e. a risk asset. Outflow of risk assets, inflow into a safe haven asset, i.e. the dollar. So this is, again, why it's important to understand where money is flowing in and out of due to these economic indicators, right? So now let's go over more so short-term price projections in my immediate areas of interest. And again, I just want to show you guys that we put out all this information well in advance. So scrolling up here, you can see putting out this information in advance to our private community. A screenshot was sent via my private analysis on March 18th, yesterday, when XRP price action was sitting at around 60 cents. So let's expand this screenshot. And where here I mentioned to the CYPRX private community that we were looking for deeper retracements down into 58 cents. You guys can see deeper retracement buys around 58 cents. Why was this? Because I was still seeing strength predominantly in the United States dollar, which I know negatively impacts risk assets. So you can see we mentioned a slight tick up above 61 cents, but then looking for 58-cent deeper retracement. And sure enough, you can see here, just showing you guys where the screenshots exist. Here is Monday, March 18th. 12:46 p.m. So this red circle is where we put out the first analysis, which was this analysis here, looking for a slight increase in price. What did we get shortly after? A slight increase in price, right? And then Monday, March 18th, the following message I said to the CYPRX private community, you can see at 10:14 p.m., this red circle is 10:14 p.m. yesterday, March 18th. I said, price below 60 cents on XRP. Remember, our next bearish targets are at 55 to 58 cents. And sure enough, XRP price broke below 60 cents and tapped into 58 cents to the absolute T of a degree. So you can see the accuracy again with inside the private CYPRX community, putting out this analysis well in advance, letting them know that I was looking for a slight increase in price, right? And then a deep retracement down into 58 cents. And sure enough, we got that price action to the absolute T. Slight move up, deep retracement down into 58 cents, giving them updates in the private community as price action plays out to show them that we can give this information well in advance before the moves simply by understanding fundamentals and technical analysis without any indicators, without any magic Fibonacci sequence numbers. It's just logic, right? All right, so now that all of that information is out of the way, let's go over the potential scenarios that could play out this week if we see a further dollar strengthening, or if we see the inverse and we see dollar fail to break above the 104 and start to retrace some of this previous bullish move. So let's go over the most ideal scenario first as risk asset investors. What would we preferably like to see? Well, given the fact that the FOMC announcement is set to come out tomorrow, everybody should be paying attention to this information. Now, the ideal scenario tomorrow is that we see a copy and paste scenario or speech from Jerome Powell solidifying that at some point in time in the future, the Federal Reserve will cut rates. This will prop up risk assets most likely and create a demand more favorable for a risk asset environment and weigh on the United States dollar. What am I talking about? Remember, just a couple of days ago, right? Powell testified in front of Congress, giving his testimony, you can see markets end the day higher after Fed Chair Powell's testimony before Congress. So his more so dovish to neutral tone propped up risk assets, where he was saying things like he expects rate cuts, but inflation progress is not assured yet. So we still need to see some lower inflationary readings before the Federal Reserve can cut rates, but he still put the expectation of rates propping up, again, remember what has been boosting risk assets, fueling hopes that the Fed's going to cut rates. That's what we want to see tomorrow. We want to see a more favorable environment for rate cuts this year from the Federal Reserve. So in a scenario like that, where Jerome Powell copy and paste his pretty much testimony, her speech in front of Congress, the House committee, most likely scenario on the dollar that we see give or take some liquidity grabs. And the ideal scenario is that we cannot hold bullish above the 104 and we start to correct some of the previous bullish move, right? Heading back down into this previous range, this would be more favorable for risk assets, potentially even seeing a further decrease in the dollar to break back below the significant psychological level of the 102.8 to head back down to these previous range lows over to the left-hand side. This scenario, i.e. a more dovish tone, a more dovish to neutral sentiment from the Federal Reserve, solidifying that rate cuts are imminent at some point in time in the near future. They just need to see better inflationary readings, i.e. inflation coming down to their goal of 2%. This would favor risk assets, weigh on the dollar, and most likely create a favorable environment for us as risk asset investors in a scenario like this. Now, inversely, i.e. the opposite, would be a more hawkish sentiment, completely outwitting all of the things that he said in his previous testimony to Congress, changing hands, obviously, of course, because of the uptick in CPI and PPI data that we saw, and then Fed Jerome Powell delivering a more hawkish tone tomorrow, right? i.e. saying things like rate cuts are nowhere in the near term. We're not thinking about cutting rates anytime soon because of higher inflationary readings that we've seen recently. All of those comments or any comments surrounding any hawkish statements or hawkish commentary would most likely deliver more demand and strength to the dollar and weigh further on risk assets. So in a scenario like that, there's two scenarios that I could see potentially playing out. A slight retracement on the dollar from where we currently stand to revisit better buys, i.e. as long as price on the dollar can hold above the 103.3 to 103.4, we could potentially see another leg up on any hawkish deliverables from the FOMC announcement tomorrow, putting further pressure on the rate cut scenario, right? Most likely, we will see the dollar back above the 104. Either that, or I could see continuation buys from where we currently stand as of right now. A scenario like this on the dollar, anything above 104.00, breaking above these previous highs and pushing back towards the highs that we saw in February would create a less favorable risk on market sentiment, creating a risk off market sentiment, would further weigh on digital asset prices and put more strength and emphasis behind the United States dollar. So in a scenario like this, right, we would most likely see deeper retracements across the digital asset space as a whole. So if you're still here, now let's get into some XRP price action, i.e. scenario number one playing out, which would be a risk on market environment, favorable market environment for us as risk asset investors. And then we'll get into scenario number two, giving immediate targets, i.e. bullish and bearish. So scenario number one was dovish to neutral sentiment from the Federal Reserve and Jerome Powell tomorrow, i.e. further bolstering the hopes and the expectations that at some point in time in 2024, the Federal Reserve is going to cut rates. That would most likely strengthen risk assets. So on XRP, I've mentioned that 58 cents to 55 cents is my bullish threshold, where as long as price action is above the 55-cent psychological level, I will continue to look for buy positions. That means that even if we see a deep retracement down into roughly around 55 cents, or this previous demand range where you can see price back on February 28th, bought from the significant area of interest, same thing. Roughly on Tuesday, March 5th, we saw another interesting buy scenario play out here, roughly from around 55 cents, that took us all the way up into 74 cents. So as long as we see a favorable risk on market environment, a dovish to neutral tone from the Federal Reserve, and we see a further weakening of the United States dollar, 55 cents is my last threshold before I will reverse my bullish bias. So scenario number one, or more favorable scenario that I would like to see, is a deeper retracement for better buys down into 55 cents to take price higher. Scenario number two will be buys from where we're at, give or take some slight pullbacks to roughly around 58 cents to retest that psych level to take price higher. And then scenario number three would be buy continuations from roughly around 62 cents if we can break that 62-cent threshold and continue higher, right? So this would be a more favorable scenario for me on XRP. Our most immediate targets, obviously, of course, are going to be the 70 to 74 cent range. I've always said anything higher than 75 cents, we will look to target 86 cents to a dollar if we can ever make it that far, right? Now, inverse scenario, let's talk about downside potential targets, right? So this would be the opposite scenario. This will be if we see a more hawkish tone from Jerome Powell tomorrow and we see further strengthening in the dollar, i.e. the dollar breaking above 104.00, heading back to those February highs around 105, creating a more risk-off, risk-averse market mood, investors seeking safe haven, i.e. strengthening the dollar, and further weighing on risk assets, right? So with that being said, if price can break below 55 cents on XRP, coupled with, right? So remember, we are looking for a deep retracement down into 55 cents. So if we can see price break below 55 cents and we see a less favorable risk on market mood, i.e. a risk off market mood driven by dollar strength, my next bearish targets are going to be 50 cents. If at any point in time we break 50 cents, my next bearish targets are going to be 48 cents to come back down and revisit these lows all the way from February 1st. Okay. So I will only be looking for bearish targets of 50 to 48 cents if we can break below 55 cents and we can see the dynamics and risk market sentiment change hands. That means we see a more favorable environment for the US dollar, a hawkish tone from Jerome Powell, a risk off market sentiment, and couple all that with price action. So a break below 55 cents. Our next bearish targets will be 50 to 48 cents before we further position ourselves for buys. Aside from that, anything above 55 cents, I'm still bullish on XRP. So with those targets in mind, let's see how price action plays out over the next consecutive couple of days. Make sure that you guys are paying attention to detail. Make sure you guys know why your digital assets are moving the way that they are, why they were bullish, why they are now pulling back. So that way you don't get flooded out of the market and you think that the market's crashing and you need to do all these crazy things. Just zoom out and understand that all these fundamentals are readily available to you all if you choose to actually dive into and study them, right? Now, if you want a proper community to join that teaches you this information in detail, how to apply fundamentals to technical analysis and then apply that to a strategic approach to these markets, again, consider joining our monthly Discord. Many blessings to you guys. I know that this was a bit of a longer video breakdown, but hopefully in a nutshell, this educated you all on current market dynamics and sentiment moving forward. As always, pay attention to detail. Let's see how the FOMC announcement and the federal funds rate comes out tomorrow. Be cognizant out there, be aware, and I'll see you guys in the next video breakdown.